following is a paid program. The opinions expressed are not necessarily those of WNBU and Interbanks Media. Welcome to All Things Money with David Blain, a thoughtful and revealing discussion of actionable ideas and effective strategies to help you through the complex world of investing, taxes, and real estate. Now, with All Things Money, here's David Blain.
Hello and welcome to All Things Money. I'm your host for the show, David Blain. Thank you for joining us today. This week after Thanksgiving, we've had Thanksgiving last week, Black Friday, Small Business Saturday, Cyber Monday. Well into the holiday season. We appreciate you taking a little time out today to listen to us on 94.1 FM, WNBU, or Cable TV 10 in New Bern, or maybe you're streaming us on the web at www.dlblain.com. We welcome you all. We also welcome your thoughts and ideas on the show. Please give us a call at 252-633-0107. Email us at allthingsmoney@dlblain.com, or there's also a contact form on the website, but we'd love to hear your ideas for the show, any comments, questions that you may have. We've got a good show planned for you today, as always. I thought we would start off a little bit about some of the holiday season and the shopping and some of that. It looks like so far the holiday season is off to a good start. The Black Friday numbers, some of those are starting to roll in, and sales were up year over year. We see online sales on Cyber Monday were up about 18% from a year ago. Here's an interesting statistic, and that was from IBM Benchmark. Sales from mobile devices were up 7.4%. So we see that people are starting to use their cell phones for shopping. A lot of the deals that are out there, some of the retailers are really cutting the prices. The volume is definitely up. From what I've heard, a lot of the retailers have been cutting the prices. The profits may not be up, but they're sacrificing some of the profits to get the volume going. The 38% of all purchases over the weekend were made online this year, up from 31 to 32% from last year. And traffic has been up somewhere around 37%, according to Akamai, who's an online content delivery system. So it looks like so far the holiday season is off to a decent start. I thought I would do a couple little things here, kind of like maybe something that Clark Howard would do, and talk to you a little bit about a few things that, as you're going out there shopping, that you may come across that we think you should skip. Now, we're not going to get into, these are more service type items or unusual things. You know, we're not going to get into reviews of different types of TVs or what kind of jewelry to buy, but these are just some things that I see people wasting money on that they should not consider this holiday season. When I was a kid, I remember in my stocking I used to get a lottery ticket every year, and my family, it was just kind of a joke, at Christmas time. But all in all, that's one thing that we don't recommend people do, is spend money on lottery tickets. Here's a statistic that will blow your mind. Last year, Americans spent $58 billion on lottery tickets, which comes out to about $200 a person. And just yesterday it was announced that 3 money managers from Connecticut won the latest Powerball jackpot, a couple $100 million, and so generated a lot of interest in the lottery again. So we started looking at some of these statistics. That came from, according to the Powerball stats, the odds of hitting a jackpot are 1 in 195 million. So if you were to take that $5 a week or whatever and put it in at, say, 6% a year over 30 years, it would be $9,000, which is a much higher payoff than most people will get playing the lottery. $200 a person, I can't believe that. That means I didn't spend any. I know my wife didn't spend any, so somebody out there is really spending some money on lottery tickets. The number 2 thing that when you're out there shopping in the holiday season, we don't recommend that you look for is extended warranties from retailers. They usually end up costing more than just repairing the product on your own. They also, a lot of times, have language in them that disqualify your what you bought it for. They're very hard to get claims through. A lot of the products being made today are very good quality and unlikely to break down within the warranty period. That for large appliances, the 3-year warranty period is typical. Researchers found that only 1 in 5 actually need a repair in the first 3 years. If it ever breaks within the first few months or years, you can always try to negotiate directly with a retailer or the manufacturer on the defective product. Another thing, I know cell phones are very popular, you know, the iPhone, the Android, the Razr, all these type of things. When you're going out there looking for a cell phone plan, be wary of some of the higher unlimited type plans. According to some data from billshrink.com, most people waste an average of $336 a year overestimating the number of voice minutes that they use. So most people don't have a good idea of how many minutes they use and are wasting it. So anyway, that was just 3 things that I thought of. Lottery tickets, extended warranties, and unlimited cell plans. When you're out there shopping for the holidays, you may want to take a pass on those. I wanted to catch up on a topic last week that we started. We started talking about why watching CNBC won't make you rich. I also included in there why reading the Wall Street Journal, Money Magazine, Kiplinger's, you plug in the name of the publication will not make you rich. And we start off with an example. In September, investors withdrew $15.5 billion and $22.9 billion in July from stock funds. Quarter 3 was the worst quarter since the financial crisis. We talked about they withdrew another $18.2 billion in October, which turned out to be the best month for U.S. stocks in 25 years. So year to date, U.S. investors had pulled out $53.5 billion from U.S. funds. Meanwhile, Warren Buffett invested $23.9 billion in U.S. markets in quarter 3, his fastest pace in 15 years. Now, this wasn't all his personal money, it's mostly through his Berkshire Hathaway subsidiary, but the point is that Warren Buffett alone put in about 50% of money that investors withdrew from U.S. funds in the 3rd quarter. And we think that the strong rise in earnings for companies, low stock valuations, and low interest rate presents one of the best stock buying opportunities in the next 50 years. Most Americans are not going to take advantage of this opportunity because they get too emotionally involved in their investing. And one of the problems with this is the predominance of the online media, things such as CNBC, things like that. And that's why we designed the show, to try to give you a rational voice that isn't based on what's happening in the last 5 minutes. Well, that's about all the time that we have for right now. When we come back, we'll pick up with this topic again. So for All Things Money, I'm your host, David Blain.